Hey everyone, hope you're doing well and welcome to The Loft and welcome to this week's portfolio update. If you're new, what we're going to be doing is looking at my dividend investing portfolio, and we'll be going over the value change and the return change over the last week, as well as any buys, sales, and of course any dividends that have come in. And we will be wrapping the video up with a view of what companies have actually changed the most in up and down price trends over the last week, so we can see which ones are potentially doing better than others. If you haven't already, please do remember to subscribe if you're new, and if you are not new and you haven't subscribed, please do subscribe. It would really help the channel out and I would greatly appreciate it. So let's move over and see what's happened in my portfolio over the last week. So looking at last week, we started with a portfolio value of £3,078 with a return of 13.1%, which equates to around £356 in return. If we go through and look at the changes throughout the week, we come to a new portfolio value of £3,086 with a return of 13.3%, which works out to be around £364 in physical monetary return. Obviously, this works out to be an increase in portfolio return of about 0.2%, which if we compare to the VOO Vanguard ETF, shows that we got absolutely decimated this week, with the VOO moving up around 2% compared to the 0.2% of my portfolio. You will notice that there was a little bit of a massive drop in my portfolio around the 19th, and this was due to a slight rearrangement I made of shares in my portfolio and some sales that I did actually make on that day. Now, talking about sales and changes to the portfolio, let's jump into the buys and sales that I did last week, which started and ended on the 19th, where I chose to sell my 15 shares of ITV for a total of £17.26p, which gave me a return of about £8. And then I followed this up by selling my 5 shares of Royal Mail for a total of £26.28p-ish, which netted me a return of around £12.50. I then used this and some additional funds that were available to buy 2 more shares of Stag Industrial for a total of £57.86p, which increases my position of that company to 6 shares, which works out to be about 5 to 6% of my portfolio. I do want to touch briefly on the reasons that I actually sold Royal Mail and ITV. And some of you may be aware, if you've watched my past videos, that for the last month or so, both Royal Mail and ITV have been the biggest cash generating products from growth that I've got in my portfolio, with a return sitting around 90 to 100%, sometimes going slightly above it. The reason that I've sold out is I did buy these companies purely for growth benefits so that I could then use the profit from that to buy more dividend stocks, which is what I've done with Stag Industrial. How I do this is when I buy a company that I believe is undervalued and I'm buying purely for growth, I essentially set 2 limits. I set a higher limit and a lower limit at the point that I wish to sell. When the company goes past the lower limit, I then keep an eye on it, and as it reaches the higher limit, that's when I intend to sell. If it doesn't quite reach the higher limit and starts to come down closer to the lower limit again, it's at that point that I sell, so that I'm able to at least capture the growth that I wanted, even though it's not the highest ideal amount that I wanted. So for these 2 companies, I was setting and looking for a target around £125 for ITV and around £115 for Royal Mail. Unfortunately, as far as I'm aware, they never quite reached that level, and they've slowly started to drop back down now, and they hit my lower level of around 90 to 98%. So I've decided to sell, capture the profits that I've made from the growth, and reinvest that into actual dividend companies so that I can get a bit more cash flow into the portfolio. On the note of cash flow and dividends, I would normally jump across to look at what dividends have been paid out, what companies paid them, and how much I actually got from those companies. Unfortunately, this week there was absolutely no payments and no dividends, which means it's a bit of a useless exercise because there's nothing there to look at. So instead, what we'll be doing is jumping across and looking at which companies have actually grown the most over the last week, and which companies have lost the most amount of money over the last week. So starting off with the larger list, which is the companies that have gained value, we will be looking at first place of Games Workshop. They've seen an increase of around 4.3% over the last week. In second place, we have Cardinal Health with a similar growth of 4.2%. And in third place, we have Broadcom. Broadcom grew a smaller but more acceptable level, shall we say, of 3.2%. And if we flip the coin over, look at which companies have lost the most over the last week. We have first place loser being BP. They're down around 2.8%. Then we have British American Tobacco, who are down a similar level of 2.7%. And finally, in third place, we have DTE, or Deutsche Telekom, or however it is pronounced. I'm terrible at pronouncing the name. They dropped around 2.5% over the last week. Overall, I'm personally quite happy with the portfolio. Naturally, I'd rather have seen more dividends and more growth, potentially beating the VOO, but we can't win every single time, so no real issue there. Over the next week or two, I'm going to be looking at adding some more positions to my portfolio. These will be existing companies most likely. This will vary potentially depending on what happens with the price over the next week or so. But just to give you a brief idea of what I'm looking at, the companies that I'm potentially going to buy are a combination or all of one of these companies being Broadcom, Verizon, Simon Property Group or Bunzl. But as I said, this does depend on the price at the time and what money that I've got available to put in. So that is essentially it for today. Unless something comes in from my radar that I'm not aware of, those will be the companies that I'll be looking at buying for the next week or so. But I don't want to take up any more of your time, so I will be saying goodbye. Obviously, if you do want to stick around and hear some more from me for some particular reason, I would suggest checking out this video here, which YouTube thinks that you will surely like, and let me know what it is down in the comments because it'd be interesting to see. And until next time, remember to invest, save, and subscribe.